Speak about how I've been trading in the last year, and I specifically trade the currency market. So forget all that stock bullshit. I only trade currencies at the moment, particularly the pound and euro pairs, right? So we're going to be speaking about session scalps, 1, 2, and 3 day plays, what they are, and we'll get into them now on the next day. Some of you already know, like Keelan, you'll know, maybe Vic. And then, so we'll get into that now. Then the 50-minute 200 EMA. So I use this to identify the trend. I never trade against that. So on the 50-minute time frame, that 200 exponential moving average on currencies, I never trade against that. That's my trend identifier, right? Then using the weekly open as a key level, and how I use that. Again, the Asian range, how it prints and the size of it. And then I'm taking entries specifically on the 5 and 50-minute charts, right? So I'm using the 5 and 50-minute charts for my entries and exits. So yeah, we'll get into it. So what is the session scalp? So at the start of this year, the reason how the session scalps came around was I was using the L50 to determine what I'm going to do for that day. If it's in the sell zone, I want to be shorting it, etc., etc. But I came to a point where, let's say on Monday I was shorting, let's just say euro dollar, right? And then Tuesday I was coming in, I was shorting euro dollar again. Then on the Wednesday, on the third day, I was coming in, I was shorting euro dollar. It looked exactly the same, and guess what? You're getting blown out and losing in the first candle against you. And I was like, this is starting to become like a repeatable process and pattern. Mm-hmm. And what I started to see was, let's use an example of housing markets, right? Tom likes using the housing market example. If a house is valued at 500,000, right? And now you're buying it again at 600,000, and then you're trying to buy again at 700,000. The price is going up. You're not getting in at the best price. It's the same as when you're looking to trade, right? For example, if I'm looking to short here, it's not the same price as when I'm trying to short down here. It's a lot higher, maybe sometimes 100 pips, depending on how big this range is. Now, what is this range? So what I started to realize was the edge of the box. We'll get into that now in the next slides as well, but this is last week's high and last week's low. What I was realizing is my best trades come either in between this box, or if we break through it and we trade lower or above it, right? It never was coming at this box, this edge of the box. As you can see, support, edge of the box, resistance, right? So what I do is I wait for price to either reject this level or move above it, and I look to trade the break and retest the next day, right? But what I was finding, as I said, is that my best trades were not coming near these levels. I was getting blown out and just shorting or trying to buy here, buy there, and then as soon as, because the L50 is going to stay in the buy zone, right? The TDR is going to stay in the buy zone, especially if price is moving higher. Now, that's what also was saying, the indicators, you can't just rely on them, because that's what I was finding. Just coming in and being like, well, I'm going to buy or sell today because the TDR says so. And I was finding that that wasn't my best trading setup. So essentially, as I said, I wait for price to reject from the zone or bounce through it, and I'll trade it the following day. But I reject it, and then I'll come down here, and this will be a first red day. So the first day sets up that next day play, right? So I'll wait for price to reject there, move below the 200 EMA, because obviously the 200 EMA will be holding, right? Price will be holding above this. And I'll wait for that rejection off the zone, or obviously in this case, a bounce off the zone. As you can see, our first green day is the bullish day. A bounce off the zone, and I'll look to trade the second or third day play. That's my best trading setups. But the first day play sets up the second and third day play. As I was explaining, I don't know, Tom, you got the stats, and I do share them on ASFX TV. But if you're shorting a fifth or sixth day play, so what I mean by that is a second day play would be you've had one previous bearish day, and you're looking to short the second day. One previous bullish day, and you're looking to buy the second day play, so forth and so forth. If you're buying the sixth day in a row and you've had 5 previous bullish days, the chances are very, very unlikely that, especially in currencies, that's going to get a continue. It's just probabilities, right? So let's go into.
So the red day is your confirmation to look for the next.
Correct.
Yeah?
The first day, so as soon as we have an uptrend, yeah, right? We have one bearish closing after, let's say, 3 days up. That first red day is my sign to trade this day and this day. That is because now you're trading the back end of the move. When you're trying to short it up here, sometimes you're still trading the front side of the move. The move can come down and end up moving higher, right? So I'm waiting for this first red day, or in this case, we've had a downtrend, and we have our first bullish close, specifically above that 200 EMA in an uptrend and below it in a downtrend. And I'm looking to trade the second and third day play. Then we get into this box over here. I'm not looking to do anything. I'm waiting, right? And this is waiting for your best trading setup. So when you're trading near here, over here, I'll wait for this first green day. Oh, okay, we chop around here for 2 days. I'm not going to do, then we close above it and I look to take it to the other side, to the high side. We get to this box here, get a first red day close, I'm looking to trade it the second and third day after that. Right? If the second day ends green, I'm trying to short it. Well, guess what? The player wasn't there. That's going to happen, of course. So we'll get into a couple of examples in a minute. But yeah, over here. So the first day play sets up. So first red day after an uptrend, or first green day after a downtrend sets up the second and third day play. This is my highest probability. The reason I call it a session scalp is just a term that I've deemed it, because age of the box, session scalps is just something I named it, right? So away from previous week's high and low. So you can mark that out. You can simply go back and mark out previous week's high and low on the chart. I just look at the 15-minute chart personally. I can do it on the 1 hour, but whatever. You mark it off. They're levels, they're there. It's not like a random zone that someone's going to draw. They're actual high and low. And I draw exactly to the last week, where we pinned last week's low, that zone, and obviously I draw like a box within like 30 pips of that range. So it's not when prices exactly at that level, but within that range. If you're getting towards the edge of the box, you'll see in a couple of examples, I don't look to trade near there because price could be slowing down.
Right. If you see a red day, would you expect the following day to see a break of the 200 on your 15-minute?
So ideally on the first red day, I want to be closing below that 200 EMA. Or if the first green day, above that 200 EMA. Yep. So then the next day we come in and we look to buy, obviously first red day, sell. Yeah.
Would you look for, is it just as plain as easy as just looking for a close at the end of the day, or would you look for a pullback so to confirm
Yeah, good question. So it's simply a close at the end of the day. So what a bullish day is the closing price above the opening price of the day. Bearish day is the closing price below the opening price for that day. Simple as that. Right? And that's on the 15-minute chart, but obviously on the daily you're going to see a bullish candle or bearish candle. But it's easier to see. It's quite, you look by your eyes. It's, okay, did it close below the open price? Yes, that's a bearish day.
James,
yeah.
You don't do daily resets. If it breaks the high or low of the previous day.
So you're saying from the high low of the previous day?
Yeah. I fell break, I came back in. You don't reset the day.
So ideally, because I'm trading London, and we'll get into some examples now, ideally, I'm trading towards previous days high or low. I don't like trading. We had to trade the other day actually, where I was looking at it, but we're actually trading at previous days low. If I'm looking to short it, or if I'm looking to buy it, I'm looking to buy towards previous days high. Because if we're trading near those levels, that can be obviously critical levels as well. But it just depends on what the setup's giving me as well. But I'll show you. There's a few great examples that I have taken, so we get in the charts here. So here's a great example. Okay, so we've had a big uptrend here the previous couple of days, and we close here as a first day play. So this will be a first red day. So this is one that doesn't close below the 200 EMA. But look what happens here heading into the Asian session, after Asia into London. Because obviously I'm from South Africa, so I'm trading South African time.
What session are you trading, Joe?
London session, London Open. So as you can see, we get our first day player, but what happens is we get the multiple days of up day, and here we get a down day. Closing, here's the closing price here, change of days over here. We get the closing price here, here's the opening price, bearish day, right? I'm looking to come into the next day and take the second day play. So this would be the second day play, and this would be the third day play. Because this has happened here, and it closed below the 200 EMA, heading into London. I actually shorted this live on ASFX TV, this day here and this day there. So, and as you can see, we reject almost ideally two previous week's high. You see previous week's high, here's previous week's low. Remember the edge of the box I was talking to you about. So I don't look to trade here. So if I was looking to buy, yes, you can make money buying there. But we've probably had like 4 previous bullish days. That would be like a 5th day player. It's not my player, right? So yeah, we get the bearish day, first red day, second day play, third day play. What do you do here? Yes, you can make money, but this will be a 4th day play. I sometimes could take 4th day plays, depending on how price action is looking, and how close we are to the edge of the box. Maybe this one's not too bad, but these are my best trades here: second day play and third day plays.
Even though on the 4th day play, price ended at the same level as before, it would still be considered a 4th day play.
Yes, because you've already had 3 previous bearish days. 1, 2, 3. So this will be the 4th day.
How far above so in this case, the support line, how far up? Is there a certain percentage where you go, okay, I'm no longer going to take, we're now in that red?
Yeah, it depends. So I always draw my box like this. If I have 50 pips and my stop loss is 50 pips, I'm gonna take. But if we've got 40 pips, but my stop loss is going to be 30 pips, Yeah, it depends, you know. Stop loss 30 pips, getting there 40 pips, whatever. It just depends how close we actually get to these lows here. And how price action is actually moving, right? So if we start to make bullish price action here off previous day's low, I might not take it. You know, it just depends on how close we get to the edge of the box. For example, yeah, if this was a second day pair of, yeah, but there's the edge of the box, I probably won't take that. It's not, I mean, right there. You know, compared to, look where I'm shorting here, look how much space we got to that box compared to, like, right there, right? 20 pips. I'm not going to really take that if we're within that zone. So do you guys understand the concept though?
So it's just risk reward based.
Yeah, risk reward based. Yeah. Yeah, I'm trading for 1 hour as well. On currencies, again, currencies don't move as much as maybe stocks or indices on a day. So if I'm risking 50 pips and I can get 50 pips for 1 hour, lot of the times if I'm risking 50 pips and a pair's putting back on me 25 pips, I'm going to cut the trade. But yeah, so we'll get into some more examples.
You have a specific entry signal as well.
Yes. So we'll get into that too. But yeah, I'm using A1s and A2s on the 50-minute chart and 5-minute chart. And for those that have watched the course, you know that A1 is coming off the 21 EMA. So that bullish extension, we've also you get, but on currencies, you can get that nice extension on them for when you get a breakout. Okay, right. There's the A1 off the 21 EMA. Boom. Stop maybe at half day. You get. Yeah, we got some examples here where trades that I've actually taken. So this is what it looks like on the daily chart, right? You've got multiple updates. This is the pound-dollar cable on the daily chart. This is what it looks like. So you get moved into that previous week's high, closes the first red day. This is my trade. Second and third day plays. Right? Does that make sense?
Yeah.
And it's still A1 and entry.
A1 entries on the 50-minute chart and 5-minute chart.
We'll take 1 out of every 10 as an A2.
Yeah, exactly. But I do particularly like the 5-minute chart for entries. I found that for me, as an intraday trader trading currencies, I do like the 5-minute chart. 50-minute chart for my bias and seeing where we are on the levels, and then 5-minute charts for my entries and exits.
Do you not feel like there's, maybe not for you, do you not feel like there's a lot of noise to establish when you get in on them smaller time frames?
Not necessarily, because I know what I'm looking for.
Yeah.
Right? I know what I'm looking for on the 50-minute chart, and then I know, okay, is this a nice price? This is what I've learned a lot from Austin to say. Is this a nice price to be in? Okay, we've broken and retested the Asian range low, and it's coming into London Open. Stop at half day. I'm looking to short it. Like that last one over there.
Yeah, I guess your ranges will make it more clear.
Yeah.
He's got a bias.
I've got a bias already. I know what I want to be doing. If price action, so here's our first red there. If price action comes in here and starts bouncing off this 200 EMA, moving higher, I'm not going to look to short it, because then obviously the second day play is not set in. Maybe you want to move back up into this level before rolling over again. And we had one of those last weeks on I think about GJ or something like that. But if price is moving bullish here, I'm not going to look to short it.
Yeah, I think that's the thing. It's the lower time frame is noisy if you don't know which direction.
Yes.
If you know you want to buy it, then you want to get the best price for buying.
Yes. Exactly. And if I know I want to short this day, well, what's the best? We've broken out the Asian range. We pulled back to Asian range low. Can even short it. There's an A2 in here. Okay. There's an A2 in here. I think I sold it over there with a stop over here. But you can get in the A2 there, stop at the high. I know I want to be shorting it. But price intraday, if I come in, okay, first red day, but price is making higher lows, I'm just not going to do anything. I'm not going to just buy it.
Yeah, so there's a big difference between Austin and James. Austin will be willing to trade in either direction on his pair of
Yes.
US 500 in any day. He can trade long and he can trade it short. He can sometimes do the same both in the same day. James will only ever take one side of the direction on every day. He'll never fight both ways in the same day. He'll only ever be looking on this position to be short in here and short in here. He won't buy and won't even cross his mind because it's not in his bias.
Yeah, and the 200 EMA is this wide exponential moving average. You've got the 50, which is the blue, the 8, which is the yellow, and the red, the 21. So correct. I'm not looking, so I'm only looking for shorts this day. If price moves higher, I'm not in that.
James will go and play golf that day.
Yeah.
James,
Yes, sir.
question. If it's third or fourth day, are we willing to still take the trade with lower risk?
So yes, depending on how much space, as I said, if we have towards the other side of that box, towards last week's low if I'm shorting, or towards last week's high if I'm buying. Yeah. Okay, so Okay, so yeah, I just want to show you, here's previous week's high and there's previous week's low. You just mark it off like this on your chart, right? Look how we actually respect previous week's high. It's no coincidence. Look how we respect previous week's high, we respect previous week's low here on the Monday. So like again, then look towards the end of the week there. So just showing you, this is how simple it is to plot these levels. Go look where previous week's high was, where previous week's low, you plot your levels there, and that's kind of your box. I'm looking to trade once we either reject it, bounce off it, or if we reject, fall through it, or move above it. So I'm not looking to trade at these zones, at those zones. I'm not looking to do anything there.
How are you drawing the boxes?
Just with a...
No, I didn't know what time frame.
Well, that's...
I thought we were getting a trading view tutorial.
So I can see why you trade separately to Laura. 15-minute chart. So you zoom out on the 15-minute chart and I'm just drawing it like that, yeah. And the width, like the width. Yeah, I'm just drawing the width of 30 pips either direction. So at previous week's high, because the previous week's high where it went to, 30 pips in either direction, 30 pips above, 30 pips below. Yeah, you can get an indicator. Thomas got previous week's high. You can get an indicator, but I mean, it's simple as at the start of each week. I mean, that level's not going to change. Previous week's high is previous week's high. Previous week's low is previous week's low. It's not going to change. It's set in. Yes,
so you're just only taking one trade a day on that certain plan.
Yes, honestly, it depends. If it's a hot market, I have opportunities to I get my 1 hour and I get in again, I will do that so as well.
I'd say that's been a work on this year, yeah. If it's doing what you want it to do, they're the days that you want to press home.
Yeah.
That you want to take advantage of.
Exactly, that's been a big thing. So if I get my 1 hour, Tom and also another guy in the Black Shirt Club called Kurt, who's also from South Africa, he's been a big advocate for pushing me. If I get my 1 hour and it pulls back, gives me another A2 at the same price that I was in earlier, and it's still looking bearish, not rejecting previous day's low or previous day's high, whether I'm buying or selling, get back in. Because it's doing what I wanted to. So that's been one of my work cons here. But again, look how we chop for 2 days before exploding through. So I'm not looking to do anything. So look how we close as a red day after multiple updates. But look, that's not clean price action for me. Look how we're not really, that's super choppy at the Asian show. And then obviously we break through on the Friday, break through previous week's high, look to buy the following day. Okay, another thing I want to speak about was Asian range size and price. So on my trades that I can look if it closes a bearish day the previous day, right? What I'm looking for now on the Asian range is I don't want to, especially with currency pairs, I don't want a wide blown out Asian range because price tends to chop around for the rest of the day. Not really the most clean price action. Look at this Asian range here on GU. This is perfect. We have less than 40 pips. And look, we hold, this was from that trade that I showed you, we hold that bearish continuation. Look what happens. Lower high, lower high, into an A2, 50-minute A2, there's a 50-minute chart on GU, into A2, into A1. We're holding that bias. So price action is confirming what I want to be doing that specific day.
And I think James, what he'll do well here is he's not afraid to trade momentum.
Yeah.
Where a lot of you guys will see this bar close here, and you'll think it's going to bounce because it's right at the low of day.
Yes.
James doesn't give a fuck because he knows the probabilities are in his favor based on where we are in relation to the Asian range and in the week that it probably will continue.
Yep.
So you're going to be right every time.
Of course not.
But not looking for right every time.
Yes.
It's impossible.
100%. So that's another one. This was, there we go. So look at this again. Looking to short it. We're underneath that 200 EMA. This was a third day play, I believe, still on GU from that example that I showed you. Smaller than 40 pips, so I like to use 40 pips. I find that's my sweet spot. So the Asian range, particularly with currencies, for those that trade currencies, less than 40 pips. And look how we hold bearish continuation. Lower high, into the London Open. Why do you think I'm not trading this on the 50-minute chart? It's off the 8. Because I went to the 5-minute chart and I got an 8 on the 5-minute chart. Right? So that's why I like the 5-minute charts for entries and exits. Because if I was holding the ATMA there, I'm going to want to get in on the lower time frame.
I'll just say too, it's a shameless plug, but some of you don't know A1 and A2 fully yet. Time to get in the course. Would anyone here recommend not spending the money on the course? It's a waste of fucking time. Says the guy who's in the Black Shirt Club. And again, we would have, if this was like a lot of beginners today, like you guys, I would have spent more time on A1 than A2. Yeah. But because I knew the majority was people that got that, I knew you guys would be able to pick it up.
Cool. Yeah.
Because A2 is a pullback, A1 is a breakout.
So basically in A1 is a breakout off the red 21 EMA, whether that's on the 5-minute chart or the 50-minute chart. This is an extension of the A2 prints that A2 indicator at the 21 EMA on whatever time frame that you're looking at.
Let's do some of these.
Yeah, so let's go through some trades recently. So as I said, we get our first red day here. I look to come in and I short the second day and the third day, right? Look at the Asian range here. Underneath the 200 EMA, I'm taking my position here.
Nice and tight.
Yeah, nice and tight, like Liam likes it.
Hey.
So again, yeah, underneath the 200 EMA, again, yeah, look at the Asian range. Bearish continuation. I get my 5-minute entry over there. Simple. And then look at the weekly open. So we are going to get into this, but just note there, look, we're trading underneath the weekly open. Because essentially, when you're trading a pair, you're trading in that weekly direction as well, right? Trading underneath the weekly open, that's just extra confidence. This is something that I have been looking at recently in the last couple of months. Okay, cool. So, guess EJ actually took this trade live on ASFX TV. This would have been the 17th of November. Euro JPY 50-minute chart. So this is one of my favorite pairs to trade. I do like the yen pairs. They do tend to trend quite nicely. But yeah, we get our first red day, right? We closed as a first red day. I think we had about 3 or 4 previous bullish days. But we closed below the 200 EMA. That's where you're asking, where do I look? So we closed actually below the 200 EMA. These I found more powerful. On that previous day, when we get the first red day or first green day, we close underneath that 200 EMA. Look what happens. Nice tight Asian range, bearish market structure. Boom, 50-minute shift candle with 8 and 21 EMAs cross. That's a 50-minute A1. But right at London Open, clean and you drop any place. Obviously, I was out for 1 hour, so yeah. But look where we actually go to. Very interesting. Look at that box that I drew there. Yeah. Right by last week's low.
How did you draw it?
Same.
You know Sahan only paid to come to harass us.
I didn't concentrate, Laura.
That's where we have separate.
So this is a trade again. This is GJ. So we get our first green day of here. Look, we tried to move lower. We bounced actually off the weekly open. So we trade above the weekly open price. We move above the 200 EMA. I come in the next day. Guess what I'm looking for? Second day play, bars to the high side. Now we're inside the Asian range over here, but look, we hold the support zone. Look how many pins here. Look how many pins. We get our 50-minute 8 and 21 EMA cross, shift candle off the 21, and I'm buying it for 1 hour.
In essence, if you look at this, the previous day is the breakout, the dip is the pullback to the 50. James gets in after strength off the 50 EMA. Right. Very similar to anchored VWAP.
Yep.
That's why I said before, price pays, not a fucking indicator.
Yeah.
See that? You have 2 people that trade totally different, quote unquote, yet we would both potentially be in that trade at the same price, relatively.
Yeah, because taking it straight back.
There you go.
From a visual perspective, like that'd be your start of week VWAP that we've rejected.
Right.
That'd be your high of week,
right.
Like the high of day.
Yep.
The 1 minute, pull back, we're getting back above there, and that's what James is doing. He's just on a 15-minute time frame, exactly the same principles, but it's just on a different time.
Because we're both trading breakouts.
Yes.
So we're both not trying, you're going to see Tom in a second talk about mean reversion, counter trend. Me and James are very much in trend.
Yeah, and this is 10:45 South African time, so we're currently 2 hours ahead of UK time.
Yeah, you're ahead of the world.
Yeah, we always come first.
One more thing too, there's only 2 types of trades, in my opinion. Continuation, or like we could say 3. Continuation, mean reversion, range.
Yeah.
But even in a range, you're trading either a shorter term trend, continuation, or reversion.
Yeah.
So there's really only 2 types of trades. So you have to just understand, are you trading with trend or are you reverting back?
Yes, and I'm trading with trend. Why? Because look, I'm buying above the 200 EMA.
Yep.
I'm not crazy like Tom and Laura that's trying to trade. No, Sahan's more like me, but you know.
He wants to be like you.
Yeah. So, yeah, look again.
That's why he cut his hair.
So this is again, we close here as a first green day. This is the first green day. We close bullish for the first time after multiple down days. Above the weekly open, again, look at price action, lower high. High low, and then again, Asian range, less than 40 pips. Look what happens, we get a shift candle up, and we extend pretty nicely. That was this big bar here, was CPR. So obviously I was out before then. GJ, so this is again, GJ, first red day, so we close below, weekly open after multiple updates to the high side. Look how we get big extension actually, look here, here's the 200 EMA up here. We pull back, but look, we stay underneath the 200 EMA, we get a beautiful shift down on the 50-minute chart during London session as well.
It's all rooted in A1.
Yep.
Sees that? Like James is really focused on A1.
Why you put the stop loss outside the open of the bar?
That's a good question.
That's what he does.
So good question.
You like?
Good question. So what I've realized lately is that the wider stop losses I'm able to be at my best when I actually have more breathing room, right? I'm not trying to get,
Bring it back to your C game.
Yeah, okay. So I've realized, and speaking with Tom, is that my C game, when I have like a 15 to 20 pip stop loss, and I'm getting stopped out really quickly, but I'm actually getting the direction right. Let's say I put my stop here and it pulls back and I get stopped out. But this thing ends up tanking and I didn't get back in it, right? I'm pissed. I'd rather have a wider stop loss, because if it takes out half a day, I don't want it anymore, right? And I realized that my C game, if I have a tighter stop loss, I realized that my C game was coming into effect, because I'll take a trade, get stopped out within two 50-minute bars, and then have to get back in. And then that's when sometimes over trading comes in. I know with a wider stop loss, I can get out before hitting my full stop as well, because I know if it pulls back on me and I don't like, and it doesn't hold structure, I'm out. You know.
So this is the wider stop is a byproduct of James taking them with the start, but then understanding his own limiting behavioural problems. That the pattern that occurred was, if I have a tight stop loss and I get stopped out, last year, there's a way bigger chance that I'm going to go on tilt.
Yes.
So one of the bigger things is I'll have a wider stop, that then I can obviously size smaller, and then I can piece out, which in turn I'm reducing the chance of me going on tilt.
Yes.
So James is not actually thinking about making more money. He's thinking about saving by not going on tilt.
Yeah.
And that's what this
Real
is.
quick before we keep going, can we get the light on in the background of the Ivan, if you don't mind?
And also what's crazy to me is that, like, okay, look how I was selling at 182.
You can't just take the thing off.
Thank you. Sorry, everybody. You're falling asleep now. Come on, wake up.
So what's crazy to me is I was shorting at 182.200, but my stop loss was at 182.400. What didn't make sense to me last year was I was having a 10 pip stop loss. I'm getting stopped out because I was wrong by 10 pips, but the price is still moving in my direction. So again, just moving back to my C game, I found that it worked better for me with the wider stop. So this is just an example of a first day play. Look how we bounced off last week's the weekly open and actually closed down bearish, and that was I was shorting it the following day. Yep.
Same thing here.
Same thing.
Shift candles.
Yep. So that was GJ. That was a 5-minute chart.
Here, let's go to like this.
Yeah. Okay.
So just to I want to re-emphasize the importance of the weekly open.
Yeah.
And the 200.
So that's my bias dictator, the 15-minute 200 EMA, right? But look how we trade underneath the weekly open price all week. And you can continue shorting it. Obviously, this is the hourly chart, so you'll be trading underneath the 200 EMA over here. But weekly open and the 200 EMA. The 200 EMA on the 50-minute chart is specifically my bias dictator.
You can see, like, he'll set the weekly open.
Yep.
Avoid trading if it's too choppy at that price.
Yep.
And then when there's clear trend,
looking to trade above.
Now we're trading above. It gives him the bias that he wants to play with.
Yep.
Half the battle is knowing what direction you want to trade.
Yeah, if you can get
let go of being right every time, find a bias, trade your bias. Which goes back to what? Our trading plan rules. When you win your first trade, what do you do? When you lose your first trade, what do you do? When you take your second trade, what do you do? It should be written in your plan. So all your job is to do is come in and find the bias and then follow the rules you wrote down. Which we can give you feedback on it. Help you.
Yeah.
James,
Yes, sir.
watching your trading that you take out your trade, you close your trade when it's going against you quite often.
Yeah.
What is your strategy with that?
So that's a good question.
If we find the answer for it, then
a lot of the time, so obviously if it shifts against me, I don't want to be in it. But honestly, a lot of the time, I'm like, I'd rather be out. You know, when in doubt, get out. I can always get back in. So if I'm down 0.3R and I don't like what price action is doing, I'll just pull my trade.
I would add to it, bro. It's discretion.
Yeah.
This dude's been looking at charts every day for 4 years.
Yeah, 4 or 5 years.
So you feel. And then he knows because of where he's trading in the day. Oh, news is coming in an hour. It's not working for me. Call it.
Do you know also and it's very true, is that I've been looking at the same charts for 4 years now since I've been working with Boston. I haven't changed strategies. I've developed my own strategy within using the ASFX systems, but I've seen the same exponential moving averages day in and day out. I didn't have a losing month and then decide to trade RCT or whatever it is. You know, you can make your own strategy, but I've looked at the same thing. So whatever you do, if you're going to trade RCT, whatever you're going to do, stick with that. But I've seen these markups and these charts day in and day out for 5 years, 4.5 years.
It's not the tact, like every other answer to every question I've tried to answer today, I give a tact. If you ask a question, I want you to lead with something you say. discretion is an answer, but it's not as tactical as you would think. And it is based on experience and feel. Which is why if you go to some of these other trading conferences, they have way more vague entries when they, especially stock traders.
Yeah.
They feel their way around the market, which I think takes time and experience. But I think what he's saying is the essence of it. He doesn't change his chart layout. He doesn't change his EMAs. He doesn't even change the color of the background. So you start to really say, I don't see any of this. In his mind, he's saying, I don't see this in any of my markups. Let's go.
In my winning trades.
In my winning trades. So studying his wins allows him to have the discretion. I think that's where it comes from, to cut the losers quickly because it looks different.
Yeah.
James, I know Austin said for his strategy that it works all with US 30 and he isn't. Did you say that you haven't tried it as much with currency pairs? Have you tried this as much with US pairs as well? Or
I have not, no.
He's more of a Forex guy.
Yeah.
I like the indices this year.
You know, and it's also because I'm about the time the US markets open, it's 4:30 p.m. South African time. So
He's not going to trade it for
Yeah, I'm not going to trade from 8 in the morning to 4:30. But remember, the US markets trade more than currency pairs.
Yes.
Currency pairs tend to respect zones a lot more. Like
You'll
previous
have
week's
big
zone.
ranges on a currency pair, like I mentioned earlier, where US indices 55% of the time want to go higher.
Yeah.
Something like that. And if you hold the previous day's low, it's like 75% of the time they want to close bullish.
Yeah.
It's crazy. So you have you have an edge initially there, where like a Forex pair, he has to find his weekly open, find the range he wants to trade, and then kind of trade in that direction.
Yeah.
There's definitely a monthly level or something like that above him that he's trading to. He just doesn't see it because he's intraday.
Yeah.
Okay.
Yeah.
The other question, if you cutting your losses quicker, so don't you feel like sometimes need to let your winners run a little more to 1.3, 1.4?
So I look at it like this. I look at my.
It's right.
Yeah, of course, and that's a big work on. But what I found is that I like trading for 1 hour, and then especially if I'm getting the right direction, I'm looking to add back in. The reason being is because at 1 hour, if your risk reward ratio is 1 hour, you need a 50% win rate to break even. Now that's not me saying it. That's simple maths. So if you're trading at a 60% win rate with a 1-to-1 risk reward ratio, you're going to make a lot of money.
Yeah. That's it. Are you going to make the most? No. Someone's going to go get 2R and they're going to do better.
Yeah.
Occasionally.
But I'm going to do what's worked for me and
But
what I've been doing for trading full time for the last 3 years.
So did it pay off or you were?
We're working on it every single day. Yeah, yeah.
And also, like, because he's cut, like, this is what I talked about a second ago, because he cuts his losses and I don't think I've ever seen him in the last 6 months take a full sized stop loss. He's never like that. He's never taking a full 1 hour loss.
Yeah.
So if one win overpowers 2 or 3 losses,
Yeah.
which is probably why he makes money.
Because
he's not
need to go for like 2R because you're getting your 2R, but there's different ways to make 2Rs.
Yeah.
Because you're halving your risk instead of going for 2R.
Exactly. If I have a 50 pip stop loss, but I cut my losers at 25 pips, but I get my winners at 50 pips, guess what? I'm making 1 hour, but I'm actually relatively making 2 hour.
Yeah. Any other questions for Brucey?
Have you stopped looking at the stocks?
I still do look at stocks. I still do.
He just likes to bust on all of us.
Yeah. All right, good. Let's go to time for John.